Good morning, everyone, and welcome to the European crossover webinar. And we are seeing indices come back a little bit. Actually, they were a little bit higher in Asia, and they dipped back, kind of recovering a bit of that. And today we do have CPI in the U.S. Going in, take a look what else there is besides that. We did have UK employment, came out at 183,000. Forecast was for 178,000. And looks like that's going to be it until we get into the US CPI. We do have Canadian manufacturing sales that'll be out at the same time. And that's going to be it right there as far as economic data. So obviously that'll be the big mover. Obviously there's concerns that we see a pretty big high CPI. We'll see whether or not that comes out to be and how the market does react. But we did hit some key levels here in the Nasdaq. We actually did also in the S&Ps. If you remember, we had 44.34 as our bias chart support. That's exactly where the market went to, 44.34. And of course, the Nasdaq did go and hit some key areas, real key areas for volume, all the way to the point that we got to hit 15,342. I believe that was actually also our bias chart supported. I'd have to go and double check. And we can take a look. We had 15,365, and but our key level I was looking at, I didn't even think we would get there, which was 15,342 on the Nasdaq. But that whole area between 342 and 365, a lot of good volume support. Finally saw the market really do a bit of a short covering as they took a dip to that new low, and then we just took off quick. Stayed rather high up in Asia. And of course, as I said, we took this dip back here. So we'll see where we move from there. And we'll just take a quick look. Euro dollar just a tad bit higher here. Going into the daily. Same thing with cable. And surprisingly, we're back up here, challenging that 38.78 on cable. Also did go and tag that 73.28, which we're just a little bit off of that, not much. Dollar yen trying to push a little bit higher, but we still remain within this range. And dollar index, not a whole lot here. Take a look at gold. Gold really hasn't done anything. Poked its head above 1,800 and quickly slid back $11. That market has been the fool's gold market. Well, what do you know? Crude oil continues to move higher, and we've actually made it run up here to that 71.15. When we said we need a daily close above 71.15 to extend a new leg, we're pressing up against that area here. We obviously did get past the 70, I think it was 70.83 that we had as our bias chart. 70.85. And we can see right there, 70.85. We pushed almost a dime higher before selling back down to 70.14, and we've recovered back. With that, we'll go on and get the bias chart ready. See if that fixed itself. There we go. It did, finally did. So let's go and move into the euro. We actually had 1768 as our bias chart support yesterday, and we got down to, oh wow, pretty good, 1768. Before recovering with a hammer, trying to add on a little bit more to that. For support right now, we're going to go with if you see here the top of this wick and the bottom of that wick, that's not a perfect match, but that would come in at 1782. We'll go with that, 1782 for support. And we'll stick with this 1858 for resistance. Moving on to cable. We had 38.78, and that's what we're hitting at today. So we're going to go and keep that 38.78. They've actually kind of run into that and dipped just a hair a little bit lower, but that's going to be resistance there. So keeping that one for support, we did have 37.52. We actually held up pretty well. So these wicks down here, that's actually going to be our bias chart support now. 38.14. Next thing will be the Aussie dollar. We had 73.28. That's exactly where they've gone to today. We weren't too far off. Yesterday, the low was 73.34. So we had 73.28. We'll keep that for support. which is where they bottomed out so far this morning. I want to say bottom because we're only 16 pips off the lows, but we'll stick with 73.28. Upside we had is 74.04. We're going to go in and adjust that to right there, the high of this wick there, this one right here. Let's go with 73.93, which pretty much coincides with this wick low there. So we'll go with 73.93. And on to the dollar yen. No changes here. We're still going to stick with that 1041. Previously, we've gone with this 1026. You can almost go with right here. There's that approximately 1026 comes in at 1027. But we're actually going to go right there with that body there. And that gives us 1041. That's real resistance because if we can get above that, right there. If we can get above that, that will be it. And it's actually that comes in at exactly 1043. So I guess we can update that by 2 pips. And at least for now, we'll move the support up to these the opening on these bodies, which is 973. We'll tighten it up a bit. And onto the cash dollar index. Not a whole lot. We did make it up to I guess about 92.80. Not too bad, 92.88, but we're still looking for 93.14. Kind of similar like the way the cash dollar index, the dollar yen is with that 1043. This is some resistance here. That is a level right there. You can clearly see that, which is 92.83. They made it up to 92.88, but to me, the real marker is going to be here. Anything in between is going to be just at whatever. And so to me, this is where it'll count. 93.14. Once again with this body, and that body actually comes in at 93.157. So let's just call it. I'll just move it at 1 pip. Support on the downside. We'll stick with the 92.41. We'll stick there. And then move it on to Bitcoin. We just about made it down to our level that we've been looking for, 42.708. Came pretty close. They did recover. Thinking that they're going to try and hold here. We're going to go with these wicks. See that? And that comes in at 43.792 coming across. On the upside, we had 46.412. You can see that. We're going to go and stick with that 46.412. Once again, if you looked at this on an overall move, you'd be saying, well, that's bullish unless we break and stay below this area here. But because this was such a huge move down, the onus really is on the bulls, really opens the doors. So that's where we've adjusted this for bearish bias. Moving forward now to the S&P. Pretty good. We had 44.34, and that was the actual low, 44.34. Pretty good call on that. I'm thinking a lot of it's already been done. Let's just go with this open body there, which would be 44.43. Also, I had 44.82. That was the high. I think it actually got to, well, off by one handle. Pretty doggone good. Hit the low to the pip or handle and missed this by one handle. We'll stick with 44.82 once again. Looking at the Nasdaq. Pretty good call on the Nasdaq also. 15,365. There's all kinds of support in there. We had, which I'd shared that in the chat and on Twitter, had that area at 15,342. Which had a lot of good volume support at that level. And that's actually where the market stopped. Actually, the market stopped at 15,342 and 3/4. Which once again, not trying to offend anyone else, but once again, if you're trading at least with indices, best to just go with levels, the profile, and volume. Levels, the profile, and volume. Don't believe in these monkey patterns, and certainly not in oscillators. Oscillators are nothing more than a derivative of price. That's all they are. And if you use them, good for you. But I'll just point this out right here. What the heck would an oscillator done for you here? Not a doggone bit of good. It's overbought. It's more overbought. It's extremely overbought. It's insanely overbought. It's ridiculously overbought, and you would have still kept losing. So now for where we would stand now. And we did hold the VWAP overall. Here's the VWAP off the August lows. Holding so far. I don't know how much further we can, if we try and extend the leg down, because we've had this is a lot of support in here. We'll just have to see how this thing plays out. But we'll stick with 365, at least for now. And beyond that, we'd have to go with 315. This is a pretty good little area right in here. So on a stretch move down here, 15,296. Yeah, let's go. We'll go with here and 296. On the upside, if we get a surprise, forget about it. You'd really see they'll punish the shorts. And this is a pretty good call yesterday. The high was 15,557. So it's only off by 11 handles. We'll go with 15,535. And if they, like I said, if we get a surprise, they take off. It'd have to be 15,579. Take a look at the gold market. Or should we say fool's gold? gave it the benefit of the doubt 1812. This thing could only muster up to 180, looks like maybe 1801 before falling right back on its face. Obviously, there was a surprise it'll generate some short coverage. So I guess we'll stay with 1812. I'd go with 1808, but if we were to get some surprise on CPI, then that would probably cause them to jump up and be around 1812. I like 1808 though, but we'll go stick with that. Well, 1812. On the downside, we'll stay with 1778. And then moving on to crude oil. We talked about that. We need a daily close above 71.15. So we'll stay with, well, not stable, we'll go with 71.15. Need a daily close above 71.15 to extend a new leg up. This should not be range, that should be bullish. Oh, should be now. And support. It's called 70.21. And there we have it. There's a bias chart for today. It's just all going to be about the CPI. That's what's going to make a big difference. Obviously, if we get a strong print, correct or not, the concern will be that it'll put some pressure on the Fed and concerns about taper. I think the Fed will still find a way to get around it, although they may give a little bit of more lip service towards that, but I don't think it makes that much of a difference. But the perception may change things, but we shall see. Obviously, if we don't get a strong CPI, or if it comes in a bit under expectations, that will allow the market to kind of balance off, this recent selling that we've had. We'll have to see how that plays out. And as I said before, I don't think anything matters except for the U.S. indices. And then more so, it's just the Fed. Has nothing else in the world seems to matter. I saw, and I shared that in the chat room, the information on Evergrande. Matter of fact, I actually still have that. I'd saved that, and I posted that in the chat room. Look at this. Shares of China's Evergrande new energy vehicle plummeting more than 20%. Look at that thing. That thing has just been falling. And there's all these concerns. This is like a Lehman Brothers. Nobody cares about China anymore. I'm just saying this is the truth of the matter. And I was saying that in the chat room. I mean, was it almost 2 weeks ago? Maybe it was 12 days ago. China PMI came in sub 50. What happened? S&Ps and Nasdaq just went to another all-time high for the next few more days. China doesn't matter anymore. And some of these other areas, they simply don't matter because the only thing that counts is the Fed. When the Fed decides to call it a day, then you'll see all these other stories garner fruition. And then people say, oh, I thought you said it didn't matter. Only when the Fed matters. The Fed is running the whole show. Because once again, the Fed, we're not in negative interest rates like the rest of the world is. So despite they've done this, that, whatever, hey, they still run the show, rule the roost. And if that does happen, like I said, you'll see the dollar take off like it did 2 Marches ago. Not last March, but the previous March, when the dollar went well above 100, and the Fed and actually Treasury had to step in and let that thing try and push it back down for all these other countries with dollar-denominated debt that were getting themselves in trouble. So until then, nothing else in the globe really matters, and that's just the truth of the matter. Here's China with a big, their own version of supposedly Lehman Brothers, and what the Nasdaq and the S&Ps do during Asia. they just continued to move higher. That's it. That's all they did. They just continued to move higher. So once again, like I said, nothing matters at this point other than the Fed. There's the bias chart. I'll go and get that posted. And thanks for joining us here on the European Crossover.